Hi guys, welcome to my YouTube channel and today I'll be sharing a strategy based on Bollinger Bands. There are many ways to trade the market using Bollinger Bands, but the strategy that I'm going to share is based on Bollinger Bands squeeze and breakout. Basically, Bollinger Bands are volatility bands and they automatically widen when there is high volatility and narrow when the volatility decreases. We will look for a breakout after a squeeze or a period of low volatility. The breakout has to be supported with above average volumes. So guys, I'll show you on chart how to trade this setup. So as you can see that this is a PNB Housing Finance chart on investing.com. So the first thing that I'll do is I'll add Bollinger Band indicator by clicking on this icon. The settings that we are using are default settings. 20 is the middle band or the simple moving average and 2 is the standard deviation. So the upper band is +2 standard deviation of the middle band and the lower band is -2 standard deviation of the middle band. I'll change the background color. I'll make it a bit lighter. Yeah. So once we have applied the Bollinger Band, the first thing that we look for is a period of low volatility. So low volatility is a period where all the three bands are very close to each other. Like this is a perfect example of a squeeze where you can see that the all the three bands they're coming close to each other, and you can see that this is a narrow range where the stock is moving. So this is the range which is a period of low volatility. So we have to look for this period first and then we have to look for a breakout. So this is the breakout with supported with above average volumes. So what would be the entry? Our entry would be above the high plus a filter of 1% of the candle, breakout candle. Yeah. So for example, if the high of this candle is say 100, so our entry would be 100 plus a filter of 1%, that is 101 would be our entry on the next day. So the next day, whenever 101 is breached, we would enter. And similarly, in case of SL, the stop loss would be the low of this candle minus a filter of 1%. So that would be if the low of the candle is 100, so our SL would be 100 minus 1, that is 99. Basically, I use a filter of 1%, but you can use a filter of 0.75% or 1%, whichever you are comfortable with. But do not just enter above the high, use a filter because a lot of times your stop loss would be saved and your accuracy will improve if you use the filter, both in case of entry and exit. So I have a slideshow where I'll show you this strategy. So this will become much more clearer. So these are a few slides where I saved the this setup. So this is the first setup. You can see that the stock is in a low volatility phase where the three bands are very close to each other. And this is the breakout candle supported by above average volumes. So our entry would be above the high plus a filter of 1%. You can see that this line signifies that we would not enter on the high, but we would add a filter on the high and then we'll enter. So this is a good move that we've got, and our SL would be below the low minus a filter of 1%. So this is another example. This is a very good case of Bollinger Band squeeze and breakout. You can see that these candles, the stock is moving in a sideways direction, and then there's a breakout accompanied by good volumes. Above the high plus a filter of 1% is our entry, and you can see the move that we've got. So this is another case. This is a case where the volatility is low, the stock is moving sideways, and then there's a good big green candle with good volumes. Above the high plus a filter of 1% is our entry. Good volumes, breakout, there's a squeeze, and above the high plus a filter of 1% would be our entry. So you can see that this is a good squeeze. All the bands are moving very close to each other. This was a very good setup. Again, you can see that this is the setup that we discussed in the first chart. This is the same setup, PNB Housing Finance. Sideways market, all the bands very close to each other. There's a breakout of the upper band, and above the high plus a filter of 1% is our entry. This is also a very good example. Now this is the example that I wanted to share, that you can see that this is a very good squeeze, and this is a very good candle which closes at its high. So I'll tell the significance of this candle in my upcoming videos. The candle which closes at its high. The volumes are good, okay, decent, above average. The high gets broken, but then the stop loss get hits. So I just want to tell you that this is not a holy grail. This system, you will face losses, but ultimately your accuracy, your winning trades would be more than the losing trades. The profits that you will have would be more than the losses, because the losses would be of one candle. The candle that you enter would be, the low of that candle would be your loss, and you would get bigger profits. So generally I would suggest you to have a risk reward of 1 is to 2. But in my videos that I'll be sharing in future, I'll show you how to trail your profits, where you can have profits even better than 1 is to 2. So the if you have a profit of 1 is to 2 and you have an accuracy of 60 to 65%, you will end up in profits. So that is how you manage your risk. And I'll come up on risk management part also. So this is one case which I wanted to share, that this is a good up move, but I wouldn't have traded this because of the long wick. This long wick indicates selling pressure. So generally what I do is I only go for the breakouts which close near the high. See, had this candle closed near the high, I would have entered it. But because it closed near the middle, so this indicates selling pressure, I would have avoided this trade. Then I would just like to repeat the rules of the strategy, Bollinger Band, squeeze and breakout. The first is that breakout should be preceded by a period of low volatility. Breakout should be supported by above average volumes. In case you see a breakout with low volumes, I would suggest you to avoid that trade. Entry only above the high plus a filter of the breakout candle. So you can choose the filter accordingly. If you want a 0.75 filter, you can use that, but I generally use a 1% filter. Then the breakout candle should close near its high. That is, it should not have a long upper wick. This is the case that we have just discussed. The long upper wick indicates selling pressure. So guys, this strategy can be used in all time frames, in the daily, in hourly, in 15 minutes, even in weekly. I am more comfortable with daily time frame, so I use it as a positional trading system. It is good for swing trading. Uh, People also use this for 15 minutes and hourly, but the thing is that in 15 minutes and hourly, your accuracy will decrease. This is my experience. You guys can backtest whatever time frame suits you. You can do it for intraday, or you can do it as a positional trading system. And if you have any suggestions or comments, you can write in the comment section. This can be used in equity, in commodities. You can use this in the index, in Dow Jones, Nifty, on any stock, on any commodity. This works well. So guys, this is my first video, and I'll be coming up with more videos on how to trade in the market using Bollinger Band, pure price action, that is candlestick, support, resistance, and a lot of other indicators. And most importantly, I'll come up with videos on risk management and trading psychology, which I think are the most important aspect of trading. So guys, if you have liked my video, please like the video, and if you have not yet subscribed to my channel, please subscribe. So this is it for this for the first video, and I'll also cover the sell side of it. This works. I have just covered the buying side of this strategy. It works equally well on the sell side. So I'll cover that also in my upcoming videos. Thank you.